What's going on, good people? I hope everybody enjoyed the extended 4-day weekend. Today is February the 20th, 2024. It's day 63. We made some trades today, so let's go ahead and get into it. So the first thing we need to talk about, let's talk about these important levels that we have on the chart today. So yesterday's closing price is represented by this purple line right here at 38,699. So let's go ahead and jump right into it. Let's talk about trade number 1 and trade number 2. So these trades occurred right here not too long after the market opened, and I pretty much went long right here, expecting for this higher low that got formed to act as a level of support, and then I wanted to see prices come back up and test yesterday's closing price. But what I've really been learning and picking up on is that whenever you have a higher low that's near yesterday's closing price, you don't have to necessarily just avoid it completely, but I would say that I definitely need to be a little bit more cautious around those areas, because it's something about prices when they get to the previous day's closing price, they just have a tendency to really they could go crazy. It could go either way. So you got to really just let the market kind of play out and then figure out which way it'll start to move. So what I need to do is, if I want to catch a move up to Y.C.P, I need to go long before it gets there. Going long after the fact, it doesn't mean that it can't work, but it's a lot riskier. And that's pretty much what I learned on 1 and 2, and I took some losses right there. So then I come back on trade 3, and I see prices come back and retest the first higher low that got established after the market opened at 9:30 this morning. So once they came back, they found support right there, bounced off of it, came back, reclaimed the previous level that used to be support from another higher low from before, and they made a new higher low at that level. So anytime you have a new higher low that gets established on an old higher low support level, that just makes that new higher low that just got formed a lot more lucrative and a lot more important. And more than likely, you'll probably see bullish follow through to the upside. So I went long right here and just took prices back up to the previous higher low level where I was trying to go long from at trade 1 and trades 2. So then we continue to move on. We come back up to trade 4. Now this right here was interesting, and this is a good example of why, even though the price action might look good, you still have to respect the overall trend. Because right here, all right, so if you notice yesterday's closing price, it was acting as resistance for the entire session after the market opened at 9:30. We touched it 1, 2, 3, 4, 5, and 6 times. Well, 5 times up until trade 4, right? So once we bounced off of this level again, we formed a lower high. So I was like, okay, this level has held up as resistance 4 times in a row. Now we have a lower high. So as prices come back to retest that level, I want to short it from right there and then look to take prices back down to the same entry price I got in from at trade number 3. That was my idea. But when I got into the trade, I was like, if you really look at the overall move, it's really just a bullish flag. This was the pole that established the flag, and then the flag just kind of consolidated right here, expecting for a breakout to happen. That didn't occur, but we couldn't really know that at the time, so you got to trade it for what it is. So I said, okay, we have a equal low right here, higher low right here that came back to get retested. As soon as it got retested, it didn't even make a higher low. It just shot straight back to the upside, which is telling me that it's a lot of buying momentum in the market. So then we have this one little lower high get made, and I'm like, if the overall trend is up, then I should just get out of this trade, because it doesn't really make sense to go against that momentum. So at trade 4, I got in, but then I got right back out once I realized everything that I just said. So I was like, okay, was able to avoid the losses on that one. So that's a good decision. And that's one of the things I've been really learning the most about trading when it comes down to it. Is not the trades that you take, but it's the trades that you skip. You want to make sure that you find your perfect setup that you're looking for. And if it's not that perfect setup, just let it go. You can't lose any money if you never take a trade. The only time you have money at risk is when you are opening up new positions. So if you want to go ahead and do that, you got to make sure that whatever position you're getting into, you believe in it 100%. And if you don't, just let it go. Or if you actually get into it and you realize your mistake, don't let your ego get a hold of you and make you want to force yourself to hold on to it. Just cut that trade and let it go. So that's one of the biggest things I've been learning, and I learned that on trade 4. So we come back on trade 5 right here. Now, once we broke back above yesterday's closing price, we established this little zone right here where we established 1 point, 2 points, 3 points, 4, and 5. So once we came back to hit point number 6, I expected us to come back up and retest the top of that level, but that just didn't happen. And on this trade, it actually ended up coming back to break even after I went long. So no harm, no foul right there. Now we come back down to trade 6, where we were trading in between this little small consolidation zone right here. So at 6, I shorted here at the top of the zone, but I cut the trade once I saw this higher low get formed. So let's zoom in a little bit to just kind of see that real quick. So it's hard to see it because the little execution triangle is right there, but this right here was a red candle, and then this one was a green, which constituted a higher low for me. So I said, okay, one of my biggest rules is that whenever you're in a short trade and you see a higher low get formed, you got to exit that trade immediately. No matter how strong you think the uptrend might be, no matter how much, no matter how strong you think the downtrend might be, no matter how strong you think the selling is about to come in. If you see that higher low, you got to get rid of your short trades, because that's the price action telling you that prices may be able to move higher in the immediate future. So that's the reason I got out at trade 6, and that's something that I just want to make sure I stick to. Now on this day in particular, this was actually a trade where if I would have held it, it would have worked out, but I think I made the right decision by following my rules, because it's not necessarily about the results. It's about having a plan, sticking to it, and following that plan no matter what. So if your rule is when you're in a short trade, you get out when you see a higher low, then that's exactly what you should do. And that's what I did right there on trade 6. Now on trade 7, I saw that prices actually broke past that higher low that was established on trade 6. So once they did that, I was like, okay, now I have the green light to go short. Everything is lining up. We're already in a downtrend. We established a little bit of a zone. And if you look at this swing high from this area right here at 6, this was actually a lower high in comparison to the top of the zone where we initially established the rectangle. So I said, okay, everything is lining up, lower highs in a zone, moving down to the downside. So I shorted the midpoint where prices broke past the higher low support level from trade number 6, and then just took that back down to the lows of the zone. I had an idea to kind of maybe hold this trade and see if it could come back down to this level, but it was really no real signs that indicated that prices wanted to move down there. So I was like, man, as much as I want to hold that, I can't do it. And I think I made the right decision, because if I didn't do that, prices would have came back to my break even stop and would have stopped me out. And I'm pretty sure I wouldn't have got back into that trade as we broke past and broke out of that zone. So sometimes, even though it might be more left, and after the fact you can look back and say, ooh, I could have had more, you got to make the right decision for yourself in the moment. And I feel like that's what I did on trade 6 and 7. So we come back down once we broke back into this range. Now let's talk about this range real quick. So the range is between this rectangle right here and then this singular line down below at the bottom. Now this entire range was established in the pre-market, and prices pretty much traded back and forth for about an hour and a half to 2 hours during the pre-market within this range. So once prices broke back into this range, I was like, okay, this is the range that I've been looking to trade all day. So let's see how prices react. So that pretty much leads us to trade number 8. So at trade 8, I went long right here at the lows of the major pre-market zone, but I cut the trade because I just didn't see any buying coming in, and also because I got into this trade a little bit early. I'm supposed to look for a higher low to get formed before I go long at the lows of any range or zone. Just plain and simple. That's my rule. Now I had half of my setup start to form. So I had this high volume spike right here on the long tail candle wick at the bottom of the zone, which usually means that whatever selling was going on at that time that brought prices back down to this level, that selling is over, because the high volume indicates to you that everybody that wants to sell has already done so. So if there's no buyers in the market, well, more than likely, if there's no sellers in the market, then more than likely the buyers have a good chance of pushing the market higher. So that was the first signal that I saw, but it was like, okay, Ty, you're getting a little bit too ahead of the trade by just jumping in right now, because at the end of the day, we were still making lower lows and lower highs. So I need a little bit more confirmation right there before I went long. So I just decided to get out right there before it went against me, because all these things I'm telling you now, I was kind of realizing this when I was in the trade and I wanted it to work. But I said, you know what? Let me put my ego to the side and make the rational decision. The rational, logical decision is, if your trade wasn't completely formed and you got into it anyway, just get out as fast as you can. Whatever loss you take that. Now, luckily on this trade, I wasn't able to take too big of a loss. It just took a little break even. So that's why it's so important to just stick to your rules. You can't let your ego get the best of you. So I come back on trade 9 and go long right here once again, expecting for prices to respect the lows of the range and then to see a bounce. Now right here, this was just more of a impulse trade, because I thought that prices would come back to retest this higher low that got formed right below the range. But what I've learned about higher lows is that the further away, well, the more distance and time that occurs between a higher low retest, the less likely it is for that retest to be successful. So you want to see that retest come within the immediate future. Now, depending on how you trade, that could be different for everybody, but the longer it takes for prices to come back and retest that level, the less likely you are to see actual buy-in starting to come in, at least not immediately. Because if you also look at the situation, we had a lot of selling on 1, 2, 3, 4 straight candles, which means that the selling momentum was very strong right there. And when it comes to going long for the higher low setup, one of the things I have to avoid is going long against momentum, because it just decreases the chances of that trade working. Because when momentum is in the market, momentum can carry prices much further than what you think they might. And you never really know how far that momentum will take the prices. So you just got to wait for the momentum to fizzle out. And then when prices come back around, then that's when you get in. And that's pretty much what led me to trade number 10. So if you see on trade number 9, I went long against the market pressure, right? But on trade number 10, I went long with the market pressure, and that made the biggest difference, because we had a high volume spike right here, which coincided with this swing low that we made, right? So that was a V pattern reversal, and that momentum pushed prices back up into the range. And once they got there, I went long at the same price from trade number 9, and then took prices back up to the top of the range that we established a little bit earlier in the pre-market. And I feel like that right there, trade 10, is what trade 9 should look like. So this is a good example of what to do and what not to do when it comes to trading with momentum. Don't trade against the momentum. Whatever you do, make sure you trade alongside with the momentum, because it gives you a higher chance of actually being successful, because the market is going one way and you're going that way also. You have a good chance of having a good trade and making some money. So that was my last trade for the day. I was able to finish the day with a little bit of profit, so I'm happy about that. And I would say overall, I think I did a decent job of just sticking to my plan. Most of these trades that I took, if they were bad trades or just maybe setups that were a little bit too premature, I had opportunities where I had a choice. And I was like, okay, I can let my ego force me to hold on to this trade, or I can just stick to my rules and say, hey, the trade's not working, get rid of it, wait for the next best opportunity. And I think today I did a really good job of doing that. And that's one of the biggest things I've learned when it comes to trading. Like I was talking about earlier, it's not about the trades that you take. It's about the trades that you skip, because the market is going to give you a lot of opportunities that might look good, but don't necessarily fit perfectly with the plan that you have. So if they don't fit perfectly, you have to skip them. And I think that's what I learned today. And I hope that you guys learned a little bit about that too. And that's pretty much all I have for you today. I'll be back tomorrow on February 21st, ready to do it one more time. But until then, you guys have a good one, study hard, and take it easy.